Thank you. I now turn to Mr. Bartlett of Maryland.
Thank you. You know, if an enemy had the ability through an ether wave to permeate our minds and induce us to do something really hurtful to ourselves, he might find it difficult to do better than the death tax. Chairman Walsh and Ranking Member Schrader, thank you for allowing me to participate in this hearing. As we have heard, the estate tax has disastrous consequences and is the most unfair tax that the government imposes. At a time when we in government should be removing obstacles to small business growth, the estate tax provides a roadblock to small business survival. But there are solutions, and I am particularly pleased to recognize Mr. Jack Fitzgerald, who is here today. Jack is a prominent Maryland businessman and friend of mine who studied the estate tax problem from the business point of view. He founded Americans Standing for the Simplification of the Estate Tax Asset in 2010 in order to change the collection method for the estate tax. He believes that as long as the IRS requires the estate tax to be paid, there is a simpler, more compassionate way to collect the tax that would reduce the impact of the tax and avoid the loss of the family-owned businesses at a time when they are already dealing with the loss of a loved one. I would like to congratulate him for putting together a grassroots group which includes private businesses, family farms, and individuals. I think that the asset solution as a bridge to phasing out the estate tax is well worth studying, and I am pleased that the committee has agreed to include it in the record of this hearing. In his testimony submitted for the record, Mr. Fitzgerald notes that he has paid nearly $700,000 a year in after-tax dollars for life insurance to cover the possible estate tax liability arising out of his automobile dealerships. Mr. Fitzgerald and others have maintained that many small businesses over-purchase life insurance in order to prepare for the estate tax. In your experience, is this a common occurrence in the small business sector?
I can't say that I have a lot of clients who have spent that much on insurance every year, but yes, it is a common occurrence for people to look to find a way to create liquidity to be able to deal with estate tax obligations. And one of the most significant ways to do so is to acquire life insurance, properly owned life insurance, and to hold that life insurance to deal with the estate tax obligations. Now, not everybody is insurable, and not everybody has that opportunity to buy insurance. Not everybody has the cash flow necessary to pay the insurance premiums each and every year. So while insurance is a solution, it's not the only solution to the problem.
The case for tax reform is dramatically illustrated by reviewing the data cited by the Congressional Joint Economic Committee in May of 2006. And what they found generally was that the cost of compliance was just about equal to the revenues the federal government collected from this. Could there be a dumber tax than this, where the cost of compliance equals the amount of money which the government collects from this? Can you please share with the subcommittee your assessment of the conclusions by the Joint Economic Committee?
I personally don't understand where that number came from. I mean, I know that there are things that have to be done. There are things like trusts, which should be done whether there's an estate issue or not, which I've documented in my written testimony. I've seen there are documents that need to be done if they're doing partnerships, if you have trust returns, but I know what estate tax returns cost, and I have yet to file an estate tax return that costs more than the amount of tax collected.
Well, I was quoting from their Cost and Consequences of the Federal Estate Tax, page 17, and you might check that if you question their study. Subcommittee has received testimony for the record from Mr. Jack Fitzgerald, founder of the Asset Coalition, which advocates reform of the current estate tax on behalf of small business owners. In his testimony, Mr. Fitzgerald asserts that private capital is locked up in unproductive trusts to escape estate tax liability, meaning that many of the best business minds in our nation are forced to sit idly by and can't create new wealth with their assets because they must lock them away for their heirs to inherit. In your experience, is this a common experience in the small business sector?
again, when the first person dies, we usually fund a B trust. We call a B trust. And assets are put into that trust up to an exemption amount. There is a problem, as I see, when you have to fund that trust with a closely held business stock because you don't get the dividends passed out or the income passed out to the surviving spouse who may be looking for a way to supplement their income that they've lost when their spouse died. But there is no provision in the code that prevents that trust from owning another business, starting another business, or investing that in some way to help business growth.
Thank you very much for letting me sit in on your subcommittee. Thank you.